Hello again, everybody. This is John with Tsunami Trading. Today is Wednesday, February 6th, 2008. You know, we're often asked if our system works in the Russell. It certainly does. Our system works in all markets and in all time frames. So let's take a look at the trades we took this morning in the E-mini Russell 2000. Let me show you how we made 22 points trading about an hour and 45 minutes. First off, let me state again, our system is 100% mechanical, which means we get our signals directly from the software. You've probably seen our other videos, so I'll just briefly describe how you use our system here. You can see we have numbers above and below the price bars here. These are the numbers we call PVM numbers, or price volume momentum numbers. The numbers across the top of the price bars are considered bullish PVM numbers, and the numbers below the price bars are considered bearish PVM numbers. We use these numbers to give us permission, what we call permission, to take a trade in a particular direction. We also have this line running through the middle of the price bars, which we call our trender line, and it's accompanied by these dots, these blue and red dots, which we call the trender dots. The dots help us visually see when the line has changed color. For example, there's a blue dot here, and that tells us that the trender line has changed to blue. A red dot here, it shows us, it makes it more visually apparent that the trender line has turned red. We also have price bars that are colored. We call them paint bars. They can be either blue, indicating the market at this time is becoming more bullish or is bullish, and we have red paint bars that indicate the market is bearish, and then there are some white bars that indicate the market is neutral. Here's how we use the PVM numbers. 115 on the bullish side is greater than the previous number of 99, and that tells us that the market is becoming more bullish, and it gives us permission, what we call permission, to take a long trade if we happen to get a long trigger bar. A long trigger bar consists of a blue trender line along with a blue paint bar as shown here. So we would be permitted to take a trade long on this particular bar right here once we have a series of PVM numbers such as this. Now, looking at the bottom down here, we can see that 125 is greater than 106. These are our bearish PVM numbers. And all this is doing is telling us that we have permission in the future to take a short if we get a red trender line and a red paint bar. So let's take a look at February 6th. You can see right here's the marker that begins February 6th trading day. And you can see the market was already moving up in a long position. And since we have these PVM numbers down here of 125 versus 106, we already know we have permission to take a short. If we get a red, which means a red paint bar and a red trender line. Well, we can see the trender line dot is showing up here, but we have a white paint bar. So as the market continues on, we have to have a red paint bar, and that occurs right here. So that is our trigger to go short in this market with permission. We would come into the market at the closing price of 707.8. We would have a sell stop initially set at 710.3. I round these up. And we would have a first sell target of 705.9. So before we continue, let me explain that we are using our two-contract money management system in all of these trades. And let me explain how we manage these contracts. When the market moves to our first profit target, we take profit there on one contract. In this case, you can see our first sell target is 705.9, and that would be 1.9 points from our entry price of 707.8. So we would then move our stop loss to our entry price minus the first profit target distance. We entered the market at the closing price of 707.8 and move our stop loss back 1.9 points, which means our stop loss on this remaining open contract moves from its initial position of 710.3 right here and moves to 709.7. This now makes our trade risk-free if the market suddenly turns on us. More importantly, it allows us to comfortably ride the trade for as far as we can take it on the remaining open contract until the Tsunami stop line is breached by a price bar. So let's follow this trade down and see where it goes. When it reaches our first profit target of 705.9, we close one contract off and move our stop loss as I just explained. We then leave the open contract rolling downhill until the Tsunami stop line, that's this dotted line right here, is broken by a price bar. And that occurs right here. So we would exit the remaining open position at 700.9 7.4. So as you remember, on our first contract we made 1.9 points, and the second contract was allowed to run until it was stopped out down here. On that contract we picked up 7.4 points for a total of 9.3 points on this trade using 2 lots or 2 contracts. As you can see, we did catch the top of the move here, and it wound up being a very nice move for us. Alright, as we were moving down, you can see this PVM number on the bearish side painted, and 88 is less than 125. So this number is less than the previous number on the downside, or the numbers below the price bars. This is telling us that the market is becoming less bearish, and what it does, it gives us permission to take a long if we happen to get a blue trender line with a blue paint bar. So as we come along here, we see the blue trender dot popped into place, and if we get a blue paint bar, we have permission to take a long, and that occurs right here. So let's tag that trade. We would come into the market at 700.5. We would look at setting our stop initially at 699.9, around these down, and our first buy target would be at 701.2. So the market is moving along. When we reach our first profit target of 701.2, we close off our first contract. So on this price bar, we reached our profit target of 701.2, and we close off one contract and keep the remaining contract open until this dotted line is broken by a price bar, which does occur relatively quickly here. We would close out at 700.3. After doing the calculations on this trade, we picked up 0.3, or 0.3 of a point on this particular trade. So now during this trade, this PVM number here on the top side, which is a bullish PVM number, popped up, and 84 is larger than 78. And what this does is it tells me I need to be looking for another long trade, or at least I have permission to take a long trade if I get a blue. So as the market's moving along, I see that there is a red trender dot and a red line. I do not have permission to take this short. So we just wait until we get permission to take a long, and then this number pops up, 83, and this is on the bearish side, so 83 is less than 88. This is also telling me to start looking for a long. It's less bearishness now, which implies more bullishness. So all I can do is wait and watch the market, and if I get a blue, there's my blue paint bar, then I have permission to take a long trade. And right here, boom, is where the blue trender line and blue paint bar occur at the same time. I would come into the market at 700.6. I have a initial stop set at 699.8, and I'm looking for a first target of 701.5. So when the market reaches 701.5, I close off one contract and hold my remaining contract open. And in this case, I follow this blue dotted line, and the market moved up and up and got broke right here at this price bar, which closed out at 706.5. So on this trade, using 2 contracts, we picked up 0.9 or 0.9 of a point on the first contract and 5.9 points on the second contract, for a grand total profit of 6.8 points using 2 lots. Okay, I am running out of time for this video, so let me speed this whole operation up. You can see here that we have a 90 showing up versus 75, telling me I can take a long if I get a blue. But I never get a blue. I get a blue paint bar, but I don't get a blue trender line to go with it. In the meantime, I've got an 81 here on the bearish side, larger than 75, telling me I can take a short on a red from this point forward, and that occurs right here. So I'll speed all this up. I have permission to take a trade here for a short, which got stopped out. I have permission to take a long here on a blue. 88 is greater than 73. Market moves up. I have permission to take a short right here. 76 is less than 83. Had permission to take a long right here. 77 on the bearish side is less than 86. And I rode that up until the trade got stopped out right here. Here are the trades summarized. We had 8 trades, 7 winners, 1 loser. We totaled 22.3 points of profit using 2 contracts. Again, all of these trades were called live in the room today. If you weren't there, you should have been. Come and see the power of the Tsunami trading system. We invite you to be our guest for a free 1-week trial. Simply email us at info.tsunamitrade@gmail.com.